Okay, now we're going to talk about a strategic comparison of temporary protection versus permanent wealth. I had a client who was interested in a $1 million term policy. And he has a few investments as well. And he's basically doing what we know in the industry is buy term and invest the difference. And I'm just going to go through this quickly and directly to show my outlook on what my client was doing and ideal next steps. Now, we see two philosophies of protection here. One is the tenant, a person that rents, and the other is someone that's building an empire. Now, he wanted a $1 million death benefit, and my objective was to achieve that, but with the philosophy of protection that builds an empire instead of renting. So let's go into it a little more here. So the person's age 48, and at 68, as it says, he would have paid 20 years into a safety net that is removed exactly when he's statistically most likely to need it. $1 million of coverage, 20 years, no equity at expiration, 100% sunk cost. Everything that went into having that protection, gone. In contrast, we have the Fortress, permanent coverage of the same $1 million for $809. The other one was about $230 or something per month. So this one's maybe 4 times more expensive. But let's go ahead and see the advantages of it. The duration, not just 20 years, up to age 120. And we'll go deeper into all the power of it here. So, if he's 48 now and the 20-year term expires 20 years later, one day after it expires, the paths greatly diverge. One day after that policy expires, zero death benefit, zero cash equity, legacy, zero. On the other hand, should he choose the IUL policy, age 69, after 20 years, we're in year 21, death benefit, 1 million, projected but not guaranteed cash value of over 200 grand. Okay, so we have two different scenarios after 20 years. One where he has 200 grand that he can borrow from and do all sorts of things with, and another where the cash equity is zero. As it says here in the summary, with term, the money is gone. With IUL, you hold over $250,000 in liquid capital and $1 million estate. And another beauty of the IUL is that they have something called a guaranteed refund option, which means after those 20 years, if you're like, hey, I don't like the performance of this, I appreciate you giving me the death benefit for all these years, but why don't you just give me back all the premiums I paid into that? You can do it. Yeah, but let's move on. As it says here, a king enjoys his wealth while living. We have here the chronic illness rider. What that is if you cannot perform 2 of the 6 activities of daily living. So whether it's dressing yourself, bathing, walking, eating, there's 6 activities. If you can't perform 2 of them for a period of 90 days or more, then you're eligible to start to liquidate that death benefit while you're still alive, accessing up to $800,000. Okay? Terminal illness, God forbid, someone's given 12 months to live, they can start to liquidate that death benefit while they're still alive, again, up to 80% while they are still alive. And of course, there's the liquidity aspect, which is any life event, college, trip, pay off credit, whatever it is, liquidity, cash there that you can take and that you cannot be denied the loan. Okay? You've built up all this money, paid it up, and you can borrow it. And on highly reasonable terms, only annual simple interest payments. Beautiful. So, this same person, again, with buy term and invest the difference, the idea is that you get the coverage for really cheap. You get really cheap coverage, and then you try to go invest the rest. So as you saw, there was a difference between the IUL and the term of about 600 bucks. So if you've only got $800 at the end of every month, you spend 200 on the term policy, and then you put 600 into these other common investment vehicles such as 401k, stocks, high yield savings, and you hope that you, a non-professional money manager, or even these professional money managers, can do better than the IUL. But as you can see, objectively speaking, they don't objectively offer as much as the IUL. Now, what do I mean by that? Market downside protection. If we have another housing bubble burst, another COVID, another 9/11, and the market goes down, the 401k goes down with it. The stocks go down with it. The ETF goes down with it. The mutual fund goes down with it. High yield savings, no, still returns it. So only the high yield savings in the IUL protect you from the things that happen every 7 to 12 years, some sort of calamity, who knows what it'll be next. All right. Now, of course, one of them has a $1 million estate that you're building up. So why would you pay $200 to rent life insurance and $600 on these other things when they don't give you life insurance for your entire life? Next, we see here the living benefits, chronic illness, terminal illness, which is, part of life insurance. Tax-free distribution is huge because even if you did do as well as the IUL, and even if you did profit as much, if you have $1 million in the IRA, Uncle Sam's probably going to get about, 35% of that? He's getting zero from the IUL, tax-free distribution, and also tax-free growth. So you can see that the IUL gives you the house advantage. It is the thing that gives you all of this, and there's nothing here else that gives you all of it. Okay, so when you compare term to IUL, you see that the IUL is giving you more. And when you compare IUL to the other traditional retirement vehicles, you see that it's also giving you more there. And again, here again, we see the behavior of the 0% floor, where when things go below market value, you lose nothing. You lose nothing. Written contractual guarantee. No written such contractual guarantee in 401ks, et cetera, so forth. All right? Now, so again, what do you want to see 20 years from now? Term policy expiring? Or do you want to see this much capital at your disposal, projected and non-guaranteed, of course? Okay? See the full illustration for details. But my suggestion is to secure your dynasty. Don't rent your family's future. Own it. Monthly allocation is $800. Okay? That's it. Nothing more to say. Thank you for your time.